This conference will now be recorded.
Alright, let us talk about BRS or Bank Reconciliation Statement. When we talk about BRS or Bank Reconciliation Statement, we are all aware there are two types of BRS in SAP. One is your manual BRS, second one is your electronic BRS. When you're talking about manual BRS, here you're uploading statement data manually, not uploading. This is, I would say, updating statement data manually, bank statement data manually. And electronic BRS, here it is uploading bank statement manually or automatically. Both are possible here. When it comes to manual BRS, you will take the bank statement, and this bank statement you are going to update manually, meaning your manual bank statement is like a data entry. You have to do a data entry to bring the bank statement information into SAP. Based on your manual data entry, SAP will perform bank reconciliation here. But when it comes to electronic BRS or EBRS, here you are not updating any bank statement. Instead, you are uploading the bank statement, whatever the statement which is received from the bank. You will get this bank statement file either in the XML file or in the text file. This file you are going to upload into SAP automatically or manually. Both are possible when it comes to EBRS. Based on this, system is going to start performing the matching. It will try to match the bank statement transaction with your SAP accounting entry. In your SAP for bank GL accounts, you are going to input debit and credit accounting entries. These debit credit accounting entries are matched with the help of bank statement, whatever is uploaded or updated in SAP. Here you are going to get 2 points. First point you'll have to understand reconciled transactions and unreconciled transactions. In bank statement, once it is uploaded or once it is updated, the moment you start performing the BRS activity, there are two types of transactions. One is your reconciled transaction, another one is unreconciled transaction. Reconciled transaction means bank statement and bank GL entry is matched. Bank statement and bank GL entry is matched, meaning bank statement transaction and bank GL entry is matched. Unreconciled transaction means this and this is unmatched. If these two are matched, you are going to represent this as a reconciled transaction. If these two are not matched, you are going to call it as unreconciled transaction. Now, if you have to understand how exactly BRS is working, you have to first understand the logic concept, how SAP is working with respect to BRS. Before we come to understand how SAP is working with respect to BRS, slowly we need to start understanding how exactly BRS is performed. If you look at anything, this is all about bank transactions. First thing, this is all about bank transaction. When you're talking about bank transactions, you should have a clarity what are the bank transactions. In general, when you look at any bank transaction, you will have payments, you will have receipts, you will have expenses or also charges, you will also have incomes, meaning from the bank statement you will be able to see the payments that are initiated from your side, receipts that are received into your bank account, any expenses, any charges that are incurred by your bank account, or any income received in your bank account. These are the four broad categories that are possible from your bank statement. Now when you're looking at these transactions from the bank statement, you need to understand how I'm able to segregate or how I'm able to track what entry is coming for what purpose. If you're talking about payment, you're talking about any kind of payment. It can be vendor payment, it can be employee salary payment, or it can be down payment, it can be customer refund, it can be any kind of a payment. At the end of the day, you're talking about what is the amount which is paid from my bank account. In short, whatever the amount which is paid from my bank account. In short, when you're talking about payment, you're talking about outgoing here. You're talking about outgoing, meaning money outflow or money inflow. You can communicate this with multiple terminologies. I can say outgoing money or money outflow, okay, or this can be negative. Your outgoing transaction is also represented as money outflow transaction, or it is a negative transaction. Similarly, when I'm talking about receipt, receipt is my cash inflow or money inflow. I am receiving money into my bank account. This is, I would say, inflow. I'll also say incoming. Negative will become positive. Negative will become positive. And similarly, when you're talking about any expenses or any charges, this is nothing but outflow. Whenever you're talking about any expenses, any income, this is nothing but outgoing. Towards the charge, your money is going out. Similarly, when you're talking about income, towards the income, money is coming inside your bank account. This is nothing but your incoming. Once you understand this, you need to have a clear differentiation between money incoming transaction, money outgoing transaction in the bank account. How your bank account is receiving the money. Similarly, how your bank account is spending the money, meaning incoming plus outgoing. You need to have a clarity before you start practically understanding what is BRS, how things are happening in BRS. If this is not clear, many things will be very tricky for us, because at the end of the day, you are supposed to match bank statement with your bank GL account. In order to match bank statement with the bank GL account, you need to have a clear understanding on the transactions that are happening in bank account. Same bank transaction is represented in two ways. Same bank transaction is represented in two ways. One is your bank GL account in your SAP. Another one is your bank statement from the bank side. Now, any transaction, we are all aware, any amount addition or deduction is possible using debit and credit in accounting. Any amount addition or deduction is possible using debit and credit in accounting. We have two types of accounting here. One is your financial accounting, two is bank accounting. When I'm talking about financial accounting, this is our company's bank GL accounting. Okay. Similarly, when you're talking about bank accounting, this is bank's account statement. When we're talking about financial accounting, here you're representing your organization, your company's bank GL accounting. When you're talking about bank accounting, here we are representing, this is bank's account statement. Everybody knows, with the help of bank, or bank is going to provide you the account summary in the form of a statement. You can download the statement for a particular day, you can download the statement for a particular week, or you can download the statement for a particular month. Usually, most commonly, your bank statement or your BRS is supposed to be performed reconciled on a monthly basis, meaning month opening balance, month closing balance should be exactly the same as per your bank account plus as per your financial accounting. Financial accounting is nothing but bank GL account. Bank accounting is nothing but bank statement. Now here we are talking about debit credit. And then here we are talking about debit credit. When we are talking about debit credit, we need to again have a clarity. Now, debit and credit are opposite in terms of bank and accounting. In terms of bank accounting and financial accounting. Now let us write accounting here. Okay, here I'll put financial accounting. Next one, I'll put bank accounting. And similarly, I'll put debit here. I'll put credit here. I'll write debit and also I will write a credit here. Meaning, we need to understand what is debit, what is credit in terms of financial accounting, in terms of bank accounting. If I say financial accounting, according to my financial accounting, debit is positive number. Okay, according to financial accounting, debit is positive number. Similarly, when I'm talking about financial accounting, credit is my negative number. The moment I talk about negative number, I am going to represent credit in my bank accounting. When I say positive amount, I am going to represent debit in my financial accounting. The same debit and credit will act reverse in your bank accounting. Whatever the debit and credit that you are understanding according to financial accounting, the same debit and credit will act as opposite reverse in terms of your bank accounting. Meaning, according to bank accounting, you are talking about debit when it is a negative number. According to bank account, debit means negative number. According to bank accounting, credit means positive number. According to bank accounting, credit means positive number. Now, once you understand this point, slowly you have to relate yourself and you need to make sure you are not getting confused. You are able to understand the logic. Once these fundamentals are clear in our mind, when you look at bank statement, when you look at any entry, any issue, any implementation, any kind of thing in any of your project with respect to BRS, you will not have any confusion. You will be able to understand conceptually any problem, any issue, any ticket, you will be able to easily resolve. Now, next thing, you have positive means any amount that is received or added to bank account. Positive means any amount that is received or added to your bank account. Similarly, negative means any amount that is issued or deducted from bank account. Okay, positive means any amount that is received or added to your bank account. Negative means any amount that is issued or deducted from your bank account. Meaning here you are not representing anywhere debit and credit. If you see, there is nothing called a debit here, there is nothing called a credit here, because debit and credit are opposite from banking and then from your accounting. Meaning accounting, when you're talking about financial accounting. Similarly, when you're talking about banking, you're talking about bank accounting. So do not have any confusion here. I think I have written somewhere. Financial accounting means this is our company's bank GL account. Bank accounting means this is your bank account statement. These 2 points you need to understand, meaning you need to have a clarity how and when your bank account will show debit balance, when your bank statement will show debit balance. Now, if I put few more points like possible transactions in bank. When we say possible transactions in bank, usually what are the transactions that we will be dealing with bank? Point number 1, We understood payments. When you're talking about payment, there can be multiple types of payment. There can be multiple types of payment. I would say check, let me put first one, check outgoing payments. Similarly, you can also have transfer, outgoing payment. And when I'm talking about the other one, receipts, meaning you're receiving the payment. Now, I can say check incoming receipts. Similarly, transfer incoming receipts. There can be multiple types of incoming payment or there can be multiple outgoing payments, but end of the day, let it be anything. You are going to look at it as a payment. The way payment is working, it is working in the similar way, irrespective of the nature, whether it is check in nature or it is transfer, NEFT, RTGS, ACH, whatever the mode of payment that you are representing. End of the day, it is either a payment or a receipt. It is just that mode of payment, according to bank, it is one and the same, because bank is only going to look at it whether your amount is being added or it is being deducted. That's it. In short, you're going to look at when you're talking about payment. If I'm talking about GL and then I'm talking about statement. Let me talk about GL here and also I'll talk about statement here. GL I'm representing bank GL account. Statement I'm representing bank statement. GL I'm representing bank GL account. Statement I'm representing bank statement. Bank GL account meaning your financial account. Bank GL account meaning your financial accounting. In the financial accounting, whenever you put any payment, you are going to deduct the money. In the bank GL account, whenever you have any payment, you are going to deduct the money because you are going to credit the money. According to FI or according to accounting, financial accounting, when you write the accounting entry for any payment, your accounting entry will be debit the receiver, credit what goes out. Bank money is going out, you are going to put credit side to the bank outgoing GL account. Your accounting entry will be credit side. Credit means negative number as per accounting. So you are going to do reduction here. It will be negative here. Your bank GL account, you are going to show it as a negative amount. Bank statement also is going to do the same thing. When you're issuing any payment to anybody, what bank is going to do? Bank is also going to reduce the money from your bank account. When bank is also going to reduce the money from bank account, reduction is possible only when you put a minus sign. Reduction is possible or deduction is possible only when you do minus. Bank is also going to do the same thing. Bank will also do the negative in the bank statement, meaning negative means deduction. Negative means deduction. So let me put deduction here. Same thing I'll put here also, deduction, meaning when you're talking about payment, it is a negative number in the bank GL account. It is a negative number in the bank statement also. Here negative means deduction. Bank GL account, you are going to deduct the money. Bank statement also, the bank is going to deduct the money. Same thing is applicable for both of this. In short, I'll put this as a single number. Same thing here also. Any payment, it can be any nature of payment, any mode of payment, it is going to be the one and the same. Next one, when you're talking about receipt, whenever you make any receipt or whenever any amount is added to your bank account or deposited in your bank account in terms of anything, you may be going and depositing in your bank account, or somebody is giving a check, you are depositing the check in your bank account, or somebody is directly transferring money from their account to your account. Either of these cases, end of the day, money is coming and accumulating, or money is coming and adjusted or added to your bank account. Here you are going to add or you are going to increase the bank account balance. When you are increasing the bank account balance, you are going to do a plus, because I need to add money. When I'm adding money, I need to do a plus. Plus means positive here. Plus means positive. I'm going to put positive here. Now here what I'm going to do, this is deduction, this is addition. You are going to add the money to your bank account. That is why you are going to do a plus here. Same thing bank is also going to do here. Same thing bank is also going to do. Whenever you receive any amount, bank what will do? They will also increase your bank account balance. They will also increase your bank account balance. Now, increasing, decreasing, you can also talk plus minus, you can also talk addition, deduction. Either ways, people will be using different terminology depending on the organization, depending on the situation, depending on their understanding. Everybody may be using different terminology, but as a consultant, you need to make sure whatever may be the terminology that the other person is using, please make sure you are able to understand, you are able to connect to the doctor. End of the day, you are going to look at the bank statement only with the numbers. When I say only with the numbers, if I say plus minus, sometimes I may get confused. I may be confused with plus and minus. I may be confused with debit and credit. Instead of a plus, I may represent minus. Instead of minus, I may represent a plus. Instead of debit, I may say credit. Instead of credit, I may say debit, because these things you are not going to look at it. These are only for the identification purpose. Your actual understanding is always with the help of number. Your actual transaction or your actual understanding is always based on the number is always represented with the help of a transaction. If I'm writing 100 rupees added, there should be a description why 100 is added, for what purpose. Is it somebody deposited money? Is it you deposited a check? Is it somebody transferred an amount? Or is it something you got any interest on anything, or you took any loan? For what purpose money is added? This purpose or the transaction is nothing but the statement line or the statement transaction or note to pay. This notes to pay or the statement line item or the statement transaction is what you are going to understand whenever you are making any BRS, whenever you are working on any bank reconciliation statement. Let me put, your base is bank statement. Always keep in your mind, whenever you are working on BRS or bank reconciliation statement, base is always bank statement. You are going to freeze, you are going to confirm that my BRS is completed only with the help of bank statement, not with the help of any other thing. If there is no bank statement, there is no BRS. BRS is something that you are finalizing or you are declaring your bank GL account balance with the help of bank statement. You're all aware, at the end of every month you are supposed to prepare financial statements, which includes TB PNL balance sheet. For any financial statement that you are representing, there is a supporting documentation. For any financial statements that you are representing, when we say there is a supporting documentation for bank reconciliation statement, when I say for bank reconciliation statement, your bank reconciliation statement is representing bank account balance. Your bank reconciliation statement is representing a bank account balance. For this bank account balance to represent in the bank GL account in the financial statement at your balance sheet level, you need to make sure your bank accounts are properly categorized. When we say your bank accounts are properly categorized, we are all aware, not every transaction will have immediate effect or immediate impact in the bank. When you initiate any bank transaction, you are not going to show the immediate impact or immediate effect in the bank, because bank will have an impact or effect in the statement only if the transaction is represented or only if the transaction is performed by the bank. You are initiating the transaction, bank is performing the transaction. Sometimes bank is initiating the transaction, you are performing the transaction. Both way it is possible. It is not like one way, it is two way. When we say it is two-way, there are certain transactions you are going to record first and then bank is going to record next. There are some transactions bank is going to record first, you are going to record next. Meaning there are certain entries which are coming from your side, there are certain entries which are coming from bank side at the end of the month. At the end of the month, we need to make sure the bank transactions and your GL accounting transactions are verified, are compared. This verification of bank GL transactions plus bank statement transactions is nothing but bank reconciliation. Reconciliation meaning matching. You are matching, you are comparing your GL account transactions in the bank accounts plus statement transactions in the bank statement, and you are going to identify if everything is okay or if anything is missing. If anything is missing, that is called as unreconciled transaction. Whatever is matching, it is called as reconciled transaction. Now you need to understand the minor difference between reconciled and reconciled. When we say reconciled and reconciled, not every bank will have every transaction matched as per your bank accounting, as per your GL accounting. No bank account statement, no BRS is 100% accurate. No company will have 100% accuracy in the BRS. There will be definitely transactions which are initiated but not recorded, or there will be some transactions recorded but not initiated. Both way it is possible. That is why we understood it is two-way. When we say it is two-way, missing or pending, unreconciled maybe because of bank, because of your accounting. But at the end of the month, when you're submitting your financial statement, especially your balance sheet, everybody is going to look at your bank balance. When we say everybody is going to look at your bank balance in the balance sheet, your bank balance is, for example, is represented as 25,000. For example, your bank account balance is represented as 25,000. How do I believe that your bank account balance is correct in the balance sheet? I can quote any number there. I can simply pass an accounting entry debiting my bank account for 40 lakhs. Now I can simply tell, see, my bank account balance is 40 lakhs. Where is the proof? Or if I say that in my bank account I have 2 crores. Now you will not just like that believe it, right? What you are going to ask me? You are going to ask me, show me your bank balance, open your net banking, show me your bank balance. That is what you are going to ask me to believe that I am talking true or I am telling fact. Else I can quote any number. No, 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 my bank balance, you are asking me some money. Ajay, can you give me 200 rupees? I said, no, no, my account balance is only 10 rupees. Sometimes you don't believe it what I am telling. You will ask me to show me your account balance. Why you are not believing? Because I may tell any number, but you are going to believe only when I show my bank account balance. Showing the bank account balance from the bank side is the correct balance. I can tell any number, whatever number comes in my mind, I can tell. For example, I wanted to take some money from you. Let's say today is Sunday or today is Saturday, assuming that today is bank holiday. Now I urgently need 10,000 rupees. I urgently need 10,000 rupees cash. Let's say that, can you please give me 10,000 rupees cash? I have money in my bank account, but not physically, but not liquid cash with me. Can you please give me 10,000 rupees? I will give you on Monday. Once I go to bank, I'll withdraw and then I'll give it to you. Now I will also tell that no, I don't have any UPI. I don't have any net banking. My debit card is lost. No other way. I have to go and withdraw from my bank account only. Or this is a joint account, my partner is not there. Once my partner is available on Monday, I will withdraw and then give it to you. Okay, you feel that, okay, I'll give you 10,000, but where is the proof that you have money and which you will be able to give it to me on Monday? What I need to do, I need to show my bank balance. See my bank account balance, I have 25,000 in my bank account. I will give you 10,000 on Monday morning itself. By 10 o'clock I'll give it to you. Then you feel that, okay, he has money in his bank account, I can give to him. Unless and until you see my bank account balance, you are not coming to a conclusion, or you are not believing in me that I am telling fact. Same thing is applicable for any organization, because every organization will have to represent their available bank account balance in the bank. They have to represent available amount from their bank account in terms of balance sheet, current asset, bank balances. You have cash balances, you have bank balances. When they represent available bank balance, they need to make sure whatever the available bank balance which is represented in the financial accounting balance sheet under current asset, below the current asset, cash and bank balances, and below that you have exclusively bank account balance. Now everybody is aware that every company will open multiple bank accounts. If it is your personal account, you may be going only with one account. Let's say I am opening my bank account only with HDFC, only with Axis Bank, only with the Citibank, only with the State Bank, or any other bank. But when it comes to an organization, organizations or companies are not operating savings account. Companies or organizations are strictly operating current accounts. When we know that every organization is operating, or every organization is using a current account, one company will operate multiple current accounts. When I say one company will operate multiple current accounts, One company may have 10 bank accounts, 20 bank accounts, quite possible, very much possible in any organization. It's not that one company will have only one bank account, one company will have multiple bank accounts. These accounts can be in the same bank, these accounts can be in different banks. Meaning, if you're talking about one company code, let's say Lenovo India only. Lenovo India may be operating 40 accounts. Let's say Lenovo India has got 40 bank accounts. These 40 bank accounts may be 40 different bank accounts, 40 different banks, meaning State Bank of India, State Bank of Maharashtra, or I would say Corporation Bank, Cooperative Bank, Axis Bank, HDFC Bank, ICICI Bank, or Kotak Mahindra Bank, like this. Different bank name may be segregated into multiple accounts. And again, within the bank, I may be operating accounts in different branches. When I say within the bank, I may be operating in different branches. I mean to say, if I'm operating one current account in HDFC Bank, I may say HDFC Hyderabad one current account, HDFC Mumbai another current account, HDFC Chennai another current account, or within the Hyderabad, I may be holding 3-4 bank accounts. So there is no rule that one company should hold only one account. Depending on their business operations, depending on their business model, they might open n number of bank accounts. Now all the bank accounts which a company is operating is represented as bank current account. All these are represented as bank current account. There is no limit. It is up to you based on your transaction, based on your operations. You can maintain n number of bank account. Now all these bank accounts are created as house banks in SAP. All the bank accounts whatever you are creating, we will be treating them, we will be creating them as house bank. Now you need to understand how many house banks do we have. Now each house bank is representing one unique bank branch. When you're talking about each house bank, you are representing house bank with the bank branch. When I say house bank is nothing but a bank branch, you need to understand. If you say I'm talking about HDFC bank, now, overall, it is HDFC Bank only, but within HDFC, there may be several bank branches. When I say within HDFC, there are several bank branches. I may say HDFC Hyderabad, I may say HDFC Mumbai, I may say HDFC Gujarat, I may say HDFC Chennai, Pune, Bangalore, likewise. Now, everywhere it is HDFC Bank only. When I'm creating the bank accounts in SAP, or when you're setting up a bank accounts in SAP, you need to have a clarity on what basis or how you're going to set up the bank accounts. This is where most of us will get confused. These confusions you have to avoid at the beginning itself. Meaning, before you step into SAP, before you look at SAP screen configuration, you need to have a clear clarity. Meaning, when I'm talking about bank account, I need to first understand I am going to identify bank account, point number one, based on the account number. When I say based on the account number, I'm going to look at how many bank accounts do I have. In the sense, your organization is operating. Let's say there are 40 bank accounts, meaning 40 bank account numbers you have got. Now, are these 40 bank account numbers are from same bank or from different bank? When you're talking about same bank or different bank, you're representing bank name and bank branch combination. Bank name plus bank branch will form one house bank. For example, I'm talking about HDFC. Let's say in HDFC I have three bank accounts: HDFC Hyderabad, HDFC Mumbai, HDFC Chennai. Now HDFC Hyderabad branch is different, HDFC Mumbai branch is different, HDFC Chennai branch is different because I am holding three separate bank account number. Because I'm holding three separate bank account number, each bank account number is representing one unique bank identification code. This unique bank identification code is nothing but bank name and bank address. Bank name is common for everywhere. If you're talking about HDFC Bank, everywhere it is a bank, HDFC only bank name. Bank address will create, or bank address will tell you the branch details of that particular bank. I may say Hyderabad Bank. In Hyderabad, if you see, there are many HDFC banks. For every area, for every locality, for every this sub classification of your Hyderabad, you may have different branches. Let's say I may say Amirpet one branch, Madhapur one branch, Kukatpalli one branch, High Tech City one branch, Gachibowli another branch, Secunderabad one branch. Likewise, I can say different bank branches of HDFC. Now I need to be very specific under which branch this account is operated, because For every bank, there is a unique identification code called as IFSC code in your Indian accounting for your Indian banking. This bank branch identification code as per SAP is represented as bank key. This bank branch code or bank branch identification code is nothing but bank key according to SAP. You may call it as any name depending on the country. In India, you call it as IFSC code. In US, you may call it as bank code or any other code. But at the end of the day, according to SAP, it is represented as bank key. You need to understand what is this bank key, meaning how am I going to identify this is HDFC Hyderabad, or this is HDFC Amirpet, this is HDFC Mumbai, this is HDFC Chennai. It is based on the bank identification code. This bank identification code is nothing but IFSC code or any name depending on the country. But according to SAP, you have to always represent this is a bank key. Bank name plus bank key will form a house bank. Based on this, you are going to decide how many house banks are supposed to be created. Meaning, first you should have a clarity before you come to bank accounting, before you come to BRS, understand on what basis you are going to decide how many bank accounts an organization is operating. According to this, how many house banks you are supposed to create. Because no surprise, tomorrow somebody might ask you if a client is operating their bank account. If the client is operating in 3 banks and then they are holding 10 bank accounts, they are operating in 3 banks and they are holding 10 bank accounts. How do you set up house bank? If you get only question like this, and this is how people will put questions to you, they simply tell an organization or a company is holding their bank accounts in 3 banks and they are operating 10 bank accounts. In 3 banks, 10 bank accounts are operated. How many house banks are you going to create? You cannot say 3, you cannot say 10. 3 may be wrong, 10 may be wrong. Then you need to logically think, then you need to logically tell, because they are giving you 3 banks like HDFC, State Bank, ICICI, and then they are telling 10 bank accounts, meaning 10 account numbers. How many house banks do you create? You cannot say 3, you cannot say 10. 3 may be wrong, 10 may also be wrong, or 3 may be correct, 10 may also be correct. Meaning these questions will not have the direct answer. You need to explain. You are going to create house bank based on the account information. Account information means these 10 bank accounts are operated in which branch of the respective 3 banks. If these are all handled within these 3 branches only, then I'm going to create 3 banks, 3 house banks. If these 10 bank accounts are represented or are operated in 10 different branches of the 3 respective bank, I'm going to create a 10 house banks. Meaning it is not straightforward. You cannot blindly tell 3, you cannot blindly tell 10, or it can be 5 also. What you can see is only 3 and 10, but the answer can be 5, answer can be 4, answer can be 2, or answer can be 8, 9, 10 also, depending on the logic. These logics you need to understand. It's not that 3 bank accounts are there and 3 banks are used and 10 accounts are operated. How many house banks do you create? Fill in the blank. You cannot blindly see, okay, 3 is there, 10 is there. Don't think innovatively, try to put 3 or 10. You need to logically think. As a consultant, you need to think how SAP is going to represent, how SAP is going to identify the bank account. Accordingly, you should represent your answer. Only then the other person feels, yes, he or she has got understanding on how bank accounting is working. If you do not even prove that you know how bank account is created in SAP, forget about PRS. At this base level, if you are not strong, at the base level, you are not able to convince the other person, nobody will be okay with us. So what you need to do, you need to first understand on what basis bank accounts are created. First point. Second point, how bank transactions are identified. When we say how bank transactions are identified, you need to make sure payments, when you're talking about payment, what kind of payments are possible. You can only talk about outgoing payment. When you're talking about receipt, you are only talking about incoming receipt or incoming payment. Here, any payment that you're representing, it will be a negative number. When I say it will be a negative number, you are deducting the amount. You're deducting the amount or you're decreasing the amount. You're deducting the amount or you're decreasing the amount. Similarly, when it comes to positive, you're talking about increasing the amount. Here you are talking about increasing the amount. When you are increasing the amount here, again you need to make sure why are we increasing the amount. Again we need to make sure why are we increasing the amount and on what basis we need to do it. Okay, on what basis we need to do it. It is all dependent on the business transaction, whatever is represented in the bank statement. Meaning you need to have a clear understanding on how bank statement transactions are represented and how you are going to identify it. Now, if you look at this negative, negative, positive, positive, everywhere it is decrease, decrease only, because as per you and as per me, it is the same thing. If you issue payment, you are going to reduce the amount. Bank is also reduce the amount. Now, if I say here, or let me put this amount here. I'll put two more color, this and this. Let's say GL, the available balance is 1000. Here also it is 1000. 1000 here, 1000 here also. What I'm going to do, let's say I issue a payment. If I issue a payment, check payment, let's say 200. Here also check payment 200, because one transaction cannot have two different amounts in bank, cannot have two different amount in your accounting. It has to be the same transaction. 200, 200 if I put here. And if I calculate the total amount, what bank is going to do, what my GL is going to do, this color, this is going to do a negative. So I am going to put a negative here. I'll put a negative here. And if I do a total, I am going to get 800 here. If I do a total, I get 800 because from 1000, 200 is reduced. Similarly, according to bank statement, also you are going to get 800 because bank is also doing minus here. Bank is also going to do reduce the money here because according to bank also there is reduction. Next thing, if you do any addition, let's say to this 800, if you add another 100 here, if you add another 100, 100 is an addition. Addition is a positive number, meaning bank is going to increase the amount. 800, if you increase with 100, this will become 900 here. Similar, this will become 900 here, meaning how values are being updated is something that you need to have a clarity. If this clarity is there, if you are able to understand these logics, there is no point of any confusion. If these logics are not clear, if these are creating a confusion, no matter what you do, you will still have the confusion. These confusions we need to avoid as much as possible. As much as possible we need to avoid this, because now you can see only one or two lines that I'm writing, but when you look at any bank account statement of any organization, you will find lots of transactions, hundreds, thousands of transactions in a month, and you need to make sure every transaction system is going to reconcile automatically. According to system, it is the same logic. When we say according to system, it is the same logic. System is only going to understand whether this is a payment or receipt, meaning system is only going to identify and then accordingly it will do plus minus. Nothing else system is doing. It is only doing plus minus. On what basis plus, on what basis minus. If you are able to have a clarity on this, there's no point of any confusion. And look at the simple transaction. Make sure you are coming out of this confusion. When I say you're coming out of this confusion, identifying a debit and credit and understanding a plus minus. If this is clear, your total BRS is clear, because complete BRS configuration is based on plus minus sign only. If plus minus is clear, then everything is clear in BRS. Always remember, in BRS, we are not going to work with the concept called debit and credit. BRS is always with the help of plus minus, increase, decrease, addition, deduction. Your whole BRS is based on this terminology only. Plus minus, deduction, addition, or increase, decrease. Nowhere I am writing debit, credit here, because debit and credit are not in sync with cash and with bank and accounting. If your accounting is telling a debit, your bank is telling a credit. If your accounting is telling a credit, bank is telling debit, meaning debit, credit are opposite with accounting and banking. So you cannot compare it. You cannot relate accounting and banking with debit, credit. Instead, always relate it with plus minus, addition, deduction, increase, decrease. If you have clarity here, you are clear with the banking and the bank statement. If this confusion is there, If this confusion is there, you will have 100% confusion in BRS, because BRS is not working on the basis of debit credit logic. Instead, BRS is working on the basis of plus minus, increase, decrease, addition, deduction, whatever you are comfortable with. So there is no concept called a debit credit in your BRS. When you are practicing, when you are explaining, you should never talk about debit credit. The moment you are using debit credit terminology, it represents you do not know BRS. The moment you are talking about debit credit terminology, you are not aware of the BRS, because in SAP, BRS is not working based on debit credit. BRS is working based on plus minus concept. You need to understand whether it is a plus or minus, meaning positive, negative. Always remember these 2 points, plus and minus. Third one, let's say charges, bank charges. Fourth one, your bank incomes. Now, if you're talking about bank charges, this is only one kind of, I'll say, bank expenses, late fee, interest expense, etc. Similarly, when you're talking about income, same thing. You're talking about here, I'll put this is your bank income, commissions, or interest received, etc. Again, here we need to have a clarity how these are classified in SAP. When I say how these are classified in SAP, we need to make sure how bank is categorizing these points. And anything that you're talking about charges, charges is nothing but deduction. Charges is nothing but deduction. I'll put the same point here. And same thing, I'll put this here. Charges are nothing but deductions here and here. Similarly, when you're talking about this income, income also works on the same logic, and slowly we need to have clarity here. When I say slowly we need to have clarity, this is your addition. Whenever you receive, you are going to add money to your bank account. Same way, bank is also going to do the same thing. Bank will also add money to your bank account. You are also going to add money to your bank account. Now, if you take this, let's say there is some amount of some charges of some 50 rupees. 50 rupees is bank charges are there. And what I'm going to do, this 50 rupees, I'm going to deduct. This 50 rupees I'm going to deduct. Whatever you're going to deduct, you're going to represent a negative number, minus. You're telling bank to minus this 50. So if you do it, 900 minus 50, this is going to be 850. And this is going to be 850 here. And when you're talking about any income, you received some amount from bank. You received some amount from bank. Whenever you receive some amount from bank, you need to again understand how I'm going to treat this bank income. Bank income, you're going to add it. Anything that you're adding, you need to add. For example, if I add bank income as 150, here also I'll add bank income as 150. Overall, if I do a total 850 plus 150, again I'm coming at 1000. Again I'm coming at 1000. Now my opening balance is 1000. Again I brought my closing balance to 1000. I brought my closing balance also to 1000 here, and my opening balance and closing balance I brought to the same number. 1000 on the top, 1000 on the bottom, but there are different transactions in between. Now how we are going to handle these transactions? When I say how we are going to handle this transaction, why my opening and closing balance is 100 is what first you need to understand, because This is a little tricky one. When I say little tricky one, opening balance and closing balance are exactly the same, though you have several transactions in the picture. Now you'll have to take this example, or you'll have to take this numbers or statement, whatever you have. Try to understand why my opening and closing is becoming same. Why my opening and closing is becoming same. Now, when you're talking about bank balance calculation here, I leave all these things for you to understand. Then we will connect again to practically put this into bank statement. We'll do the configuration. We'll bring the same number from SAP so that conceptually you will be able to relate whatever we are writing, whatever you are reading, going through this Excel sheet. First point, bank closing balance calculation as per accounting. When I'm talking about this, first thing what I'm going to take is opening balance. When you're talking about opening balance, you need to always see opening balance is positive amount. When I say opening balance is positive amount means this is a debit balance. Positive is equal to debit balance. Positive is equal to debit balance. Same thing I am going to write this here. Okay, bank closing balance as per banking. This I'll put blue color. Same thing, opening balance. This is also opening balance. Then you have a positive number. According to this, this will be negative balance. And this will be credit balance. If you're talking about opening balance, as we have understood, plus and minus. Now you have to come and look at this here. You have to come and look at this here. Here you are not talking about opening closing balance. Here you are talking about individual transaction. And down below what I am writing is not individual transaction. Down below I am writing the opening balance. Opening balance is the 1000 available balance. When I say this is available amount. When we say available amount, amount is ready for usage. Any amount that is ready for usage is nothing but positive balance or debit balance according to your accounting. Same available balance, same amount which you can use is represented as credit balance. Now here what I am going to do, I am going to put some number. When you refer the Excel sheet, please adjust the column width and all. Okay. So we said in both ways it is 1000. I am going to put 1000 here because it is a positive number. I am going to put positive. Here I am telling negative number. I am going to write negative number here. Let me put all this in the amount format. Here also I'll put all this in the amount format so that there will be no confusion. 1000 is the available balance. And after that, first transaction what we did, we were talking about payment 200. We were talking about 200 payment. What I'll do, payment. Now payments, what you are going to do, you are going to deduct the payments. You are going to deduct the payment. I'm not going to write any addition deduction here. I'm going to write payments here. I'm going to write payments and payment is 200. Now according to us, whenever you're talking about any payment, payment is negative. Payment is negative number. Negative means credit here. Negative means credit here. According to accounting, credit means negative. Now I am going to put negative here, minus 200, simple. Now same thing here also, payments, but according to bank it is also negative only. According to bank also negative only we have listed, but as per bank, when it comes to debit credit, these are reverse. Negative credit according to accounting will become negative debit according to bank accounting. So what I am going to do, I am going to put this as debit here. Debit means positive, you put 200 here. You put 200 here. And if you notice, numbers are remaining the same, the signs are getting changed. Numbers are remaining the same, sign is getting changed, meaning here it is 1000 positive. Same 1000 positive is represented as 1000 negative in your banking. 200 negative is represented as 200 positive here. After this, you have something called receipt. You have something called receipts. Receipts we understood is a plus. You are going to add it. Positive according to accounting means debit. You are going to debit this positive. Now payment is what we have listed is 100. I am going to write 100 here. I am going to write 100 here. Same thing I am going to put here. Receipts also. Now according to banking, positive means credit. According to banking, addition means credit. Now you are going to put minus 100 here. If you again notice, same amount is coming, but the sign is getting changed. Plus is becoming minus, minus is becoming plus. And after that, you had some expenses. In short, you have charges. Charges we understood, it will be deducted from your account. This is nothing but credit. This is nothing but credit here. Same credit, I am going to write this here. Now, according to bank, according to your accounting, charges means negative number. Negative number is nothing but deduction. You are going to deduct by way of debit. Charges, this is credit only. I am going to put credit of how much I put 50. This will be 50 credit balance. Now the same deduction according to bank is represented based on debit. According to bank, deduction means debit, addition means credit. I am going to put same 50 here. Again same thing. Same amount is representing but sign is getting changed. Finally, you have something called income. You have bank income. According to bank income, you understood it is a positive number. You are increasing the balance. Increasing as per accounting is debit. Increasing as per accounting is debit, and then we added 150 here. Same thing if I put income, you are going to add, bank is going to add based on credit. Same 150, it will be negative. And if I do a total for this, if I do a total for this, this is 1000 again. Same thing if I do a total for it, this is 1000 again. Meaning in this example, specifically whatever we picked, opening balance, closing balance are the same. Even in this example, what we did, we took opening balance, we took closing balance the same, so that this will be a little tricky, but this will eliminate all the confusions whatever you have. This is a little tricky, but this is going to eliminate all the confusions whatever you have. Now, first point, what I want everybody to do is understand this logic. This is statement alone I want you to understand. When I say I want you to understand, I want you to focus only on this statement. I am representing the above lines, whatever we have listed, you go through it, and the points whatever I've discussed now, go through it. Based on this, what we will do in the next session, meaning when we connect again today, we will close this today itself. BRS topic will be closed today. What I'll do the configuration for the same transaction. We will do the configuration for the same transaction, and both for the electronic bank statement and also for the manual bank statement. We will set up two bank statements, one EBS, one manual bank statement for the same transaction for two different bank accounts. Same transactions, I will take X bank account, I will take Y bank account. In X bank account, based on the manual BRS, how we are working on it. For Y bank account, based on the electronic bank statement, how we are going to work with MT940 statement. Meaning, I'll put activity to be performed. So what we will do here is 2 points. Set up two house banks. Second one, configure manual BRS and post above entries to see the same BRS values. Okay, configure manual BRS and post above entries to see the same BRS value, meaning you need to set up a house bank. Okay, and then you need to set up manual BRS, post the same entries, bring the same balances from manual bank statement. Step number 3, you are going to configure electronic BRS and post above entries to see the same BRS values. This you'll have to do, meaning same entries you have to process once with EBRS, same entries you need to process once with manual BRS, so that you will practically understand, because you're bringing the same figure, same transaction in two ways. Same figure, same transaction we are bringing in two ways. One way we are bringing it with the help of manual, another way we are bringing with the help of electronic. Then you will have a clear understanding. Any doubt, confusion, whatever you have, everything will be eliminated. Meaning you'll have a clear cut understanding, clear clarity, how exactly BRS is working. And when somebody is asking you any question tomorrow when you're in the interview, whether it is normal BRS, electronic BRS or EBRS, you will have a clear clarity to explain how exactly this is working and on what basis you have to configure, how exactly you need to explain in your interview. You'll have a clear clarity provided you are good at this logic. Okay, this you're supposed to do work on this. Once this activity is completed, we will make sure, once this activity is completed, we'll make sure we will have a thorough understanding or clear understanding on it. Okay, so again, I'll give a break of 2 hours. I'll give a break of 2 hours. Now it's 11:30 minutes, 1:30, 2 o'clock for you, right? 1 o'clock for you.
One.
All right, so we will connect at 3 o'clock sharp. We'll connect at 3 o'clock sharp and then we will do the configuration for it. Now, once the recording is ready, I will share Excel sheet. I will be sharing immediately. Go through this Excel sheet points, whatever we have done. And at 3 o'clock sharp, I'm going to do this configuration. I'll do the config for EBRS. I'll do the configuration for manual BRS. I'll bring both of the statement balances. Same figures we will bring from SAP EBS plus SAP MBS. Then we are going to have a conclusion that yes, this is how configuration to be done. Then we will talk about what we did, why we did, on what basis we have done all the configuration. When I explain practically or theoretically about our configuration setup requirement, then you will be able to practically relate to the things. But make sure by 3 o'clock you'll go through this Excel sheet and you should have at least the basic understanding. Then at 3 o'clock, the configuration which I am going to do will give you a clarity. All right.
I have one doubt. Can I?
No,
Hi,
all the
Ajay.
doubts and all will be clarified once we do the configuration.
No,
Any
not
doubt,
BRS.
confusion that is currently in any doubt apart from BRS, I'm not going to clarify now because I don't want any deviations in this sessions. For doubts clarification, I'll connect again separately where I am going to answer all the generic doubts questions. Because tomorrow when you are going to refer the recording or those who have not attended this session are going through this session, they should find only BRS content, nothing else apart from BRS. And once I do the continuation of this session today, that will be continuation of the same Excel sheet, whatever is prepared now. The same Excel sheet I am going to bring it into SAP, meaning we will do the configuration, we will bring the same number. Automatically, all the doubts, confusions, whatever is sitting in your mind will be clarified. And there I am going to answer all the queries, confusions, doubts, whatever you have on BRS. Okay. All right, fine then. So we will be connecting at sharp 3
Sorry,
o'clock.
sorry. Paid server were not working purely.
That link I will share it. That link I think I've already shared. I'll share it now again. It is working. I'll share the link again. All right, fine
Yes,
then.
sir.
So we will.
Sir, sir,
In the
small doubt,
page
sir.
server,
Uh,
No, these doubts, let me stop the recording so that the
no,
doubts will
sir.
not be part of this recording. One second.
No, sir. According this Excel, GL balance credit share is negative value.